Hey folks, how you doing? Kunal here. I am live from Hawaii. It is still like 6 in the morning over here. I've been done for the last couple hours, but had a pretty good morning. Whenever I'm on the road traveling, I focus on opening range setups so that I can get kind of in and out with my day because with the time difference and stuff like that, it's really hard. I'm gonna be the time difference here is like I woke up at 3 o'clock today to prepare for the day, and then from Hawaii I'm going to Bali, and in Bali I'll be trading at like 10 or 11 at night into the morning, and so I really focus on my opening range strategies so that I can get in and out, and if I want to continue trading on I can, but I've done my work and I can go back and I can enjoy my workcation, or I guess you can't even call it vacation if I could be out on the road for months, but workcation, I guess you can call it. But you want to be able to get in and out and do your activities and stuff like that and actually go have some fun. And so it's really important to come in and really attack the open. So this KMI is a rubber band setup, and when you have a stock that's down like 8, 9, 10 days in a row like this, you can see like it's so stretched, and you're starting to get like that climactic volume come into it. And so I was looking at this for a potential long, and I had a good morning on it. And actually, I took it once at the open, and I got stopped out for a small loss. And then once it started to rebound here, and you could see it kind of bottomed out here, it broke back above the VWAP. I entered this thing, and I just essentially put my stop at the low of day, so I was risking like I got 1540, 45 entry, and my stop was like 15 or whatever. So you're risking like 30, 40 cents, and you're essentially, your targets are, you're hoping that this gap fills, and then it can really go green and go off to the races. But that doesn't happen often. Ideally that would happen, but that may not happen, and so you want to pay attention to your resistance levels. And so, I want to sell some off into the 9 EMA or 20 EMA and then keep a few for the road. And then, so I sold some off there, and when it started to reverse, essentially what I do is I get out and I wait for it to kind of base out, and maybe it'll make a later in the day run. But typically I found that if they don't happen at the open, that kind of reversal, then it's going to be later in the day. And so, once you take your cash, you get out. And then, another trade that I did over here was just really simple, is that, with the market rolling over today, and you can see the market's down quite a bit today. Let me show you over here. S&P's down pretty decent over here, 0.87 for the day. It's been trending down all day too. And so when you get something like that and the market's kind of not rolling over per se, but you're just having really a weak day, you want to get some shorts in. And so a stock like an RLYP, you can see right here, after such a run, it's run right into its 200-day moving average, and it opened up strong today and kind of just sucked in those last buyers. But remember that you're right at resistance and you've come a long way. And so as soon as you get this like red candle that kind of reverses on it, you take this thing short with the stop above high of day, and essentially you're playing the potential reversal in this thing, and you're hoping to get this thing, down over here. And for me, I mean, when you get, I got like 29.40s, 29.30s average over here. When you get a drop into the 26s, I had like 1,000 shares or something like that, 1,500 shares. Nothing too crazy. When you get a drop like that real quick, you take it and then you can reshort on the pop or something like that, because the open is about price volatility and price discovery. And so what happens is, you want to take those flushes at the open, and then middle of the day or later, as you start to retrace, you can reshort. But this is a classic kind of fake out move here that's designed to get kind of the rookie traders to think, okay, here we're breaking the flag and we're going to go green and really break out. But the market's rolling over, and this stock's at resistance on its daily, its big picture. And so it pops in just enough people to make it think it's going to go, and then you reverse, and it gets stuffed, and that's when you want to take that thing short. But overall, that's a classic pattern that we play every day at the Open, and that's an over under type of move or a remount, you could call it. So many different names for it, but those are kind of our opening range moves that I really like to do. So that's my specialty. Is really I make probably 80% of my money in the first hour of the day, and then the rest of the day I tend to fart around. But it's awesome if you like to travel and do stuff, because you can make your money and you go. But the Open is where the toughest trades are too, and so it takes a lot of practice. You would definitely want to work on a simulator or something like that, because the Open it's so volatile, right? And so if you have 1,000, 2,000 shares and stocks move dollars, well, you can really lose your ass. And so you really either want to trade small when you're getting started off, so you can get used to the action of it, or practice a little bit on the simulator. And if it's just too much for you, that type of volatility, then wait about 30 minutes, and you'll start getting the retracements and stuff like that, where you'll get a little bit slower action, but you'll be able to play back into the ranges. So that's it for now, guys. Let me know if you have any questions. Take care.